What if your bank account got a paycheck every single month and you didn't have to clock in, answer to a boss, or even leave your house? Right now, millions of people are grinding 9 to 5 just to cover rent and groceries. But what if just owning the right 5 assets could send you cash every 30 days on autopilot? It sounds crazy, but these 5 dividend-paying stocks and ETFs actually do that. They pay out monthly, not quarterly, and you don't need to be rich to get started. In fact, you could start building this stream of income today with just a couple $100, and over time, it could replace your entire paycheck. So if you're tired of trading your time for money, stay locked in, because in this video, I'm breaking down the exact 5 monthly dividend payers that can start putting money in your pocket. Do these investments really pay monthly? Yes, every single asset in this video sends out a payment every 30 days, like a real paycheck. No gimmicks, no complicated setups. Do I need thousands of dollars to get started? Not at all. You can start small, even $50 or $100 is enough to begin building your income stream. Is this beginner-friendly? Absolutely. I've picked these 5 stocks and ETFs because they're simple to understand, reliable money, and built for passive income. Each one is hand-picked based on how consistent the payouts are, how strong the company or fund is, and how easy it is to own them. You won't need a finance degree or special trading skills. And stick around till the end. I've got a bonus tip that'll show you how to grow this monthly income automatically without investing a dollar more. Let's kick things off with one of the most reliable income machines on the stock market, Realty Income, better known as the Monthly Dividend Company. That's not just a nickname, it's a registered trademark. And for good reason. Realty Income has paid monthly dividends since 1994 without missing a single payout. Rain or shine, bull market or crash, shareholders have gotten paid every 30 days for nearly 3 decades. So what exactly does this company do? Realty Income is a REIT, a real estate investment trust. It owns over 15,600 commercial properties across the US and Europe, leasing them out to big-name tenants like Walgreens, 7-Eleven, Dollar General, and FedEx. These aren't trendy tech startups. These are essential businesses that stay open even in recessions. That's the backbone of Realty Income's cash flow. As of now, it offers a dividend yield of around 5%. And here's where things get interesting. Let's say you invest $1,000 and reinvest every monthly dividend. After 10 years, without adding another dime, that single investment could grow to over $1,700, all from compound growth. Add just $100 a month, and you could be sitting on over $15,000, generating nearly $800 a year in passive income and still growing. But Realty Income doesn't just pay dividends, it raises them. The company has increased its payout more than 120 times since going public. That means your income isn't just steady, it's rising over time, even during inflation. Stability is the name of the game here. Realty Income signs long-term leases with high-quality tenants, which smooths out income and reduces risk. Even during COVID, when other companies cut payouts, Realty Income kept sending monthly checks to shareholders. Bottom line, if you want to start building real, reliable monthly income, this is the stock most income investors consider first. Next up is a company that takes a completely different path to generate monthly income, Main Street Capital, or just Main. Main is what's known as a business development company, a BDC. That means it provides financing to small and mid-sized businesses across the United States. Think of it as a combination of a private lender and private equity firm, but one that shares its profits with everyday investors. Here's how it works. Main lends money to these companies, earns interest, and sometimes takes an equity stake. In return, it generates solid, recurring income and passes that cash straight to shareholders in the form of monthly dividends. Right now, Main pays a yield of about 6%, and just like Realty Income, it delivers those payments on a monthly schedule. That's consistent, passive income hitting your account 12 times a year. But what makes Main stand out is how conservatively it's managed. Unlike many high-yield plays that burn out fast, Main Street has a long track record of being selective, stable, and shareholder-focused. They've increased their regular dividend for over a decade and occasionally issue bonus dividends when performance exceeds expectations. And let's not forget compounding. If you invested $1,000 into Maine and reinvested every dividend, that could grow to over $1,800 in 10 years, assuming a steady 6% yield. Add just $100 a month, and you're looking at a portfolio worth over $17,000, generating close to $1,000 a year in monthly cash. Maine is also internally managed, which means lower fees and better alignment with shareholder interests. That structure has helped it outperform many other BDCs in both share price and dividend stability. If you're looking for monthly income with a bit more upside and a piece of America's small business economy, Main Street Capital is a solid choice. Now let's shift gears and look at one of the most aggressive income plays on this list, the Global X SuperDividend ETF, ticker symbol SDIV. This is not a stock, it's an ETF, or exchange-traded fund. And what SDIV does is simple. It invests in 100 of the highest-yielding dividend stocks from around the world. That includes companies from the US, Europe, Asia, and beyond. The goal? Massive yield and monthly payouts. Right now, SDIV offers a dividend yield of about 9%, which is far above what you'd get from most dividend stocks or bonds. That means for every $1,000 invested, you'd be earning roughly $90 a year, delivered in monthly payments. It's designed to maximize cash flow, plain and simple. Now let's talk compounding. If you invested $1,000 into SDIV and reinvested every monthly dividend, that one investment could grow to over $2,370 in 10 years, assuming a steady 9% return. But here's where it gets serious. Add just $100 a month, and you're looking at a portfolio worth more than $20,000 over that same 10-year span. At that point, you could be pulling in around $1,800 a year in passive income, paid to you monthly. Of course, a yield that high comes with a trade-off. SDIV invests in stocks that have very high payouts, which also means they can be more volatile or risky. Some of the companies in this fund may cut their dividends or drop in value. So this ETF isn't ideal if you're looking for long-term growth or rock-solid stability. But as a cash flow tool, SDIV can play a powerful role in a portfolio. It gives you access to global dividend payers, spreads your risk across 100 companies, and cuts you a check every 30 days. If you're focused on building income now, not later, SDIV is built to deliver just that. Want to invest globally without losing money on currency conversion? Wise gives you the real exchange rate with low fees, so more of your money goes into investments. Sign up today. Link in the description. If you want consistent income without the roller coaster of stock prices, Invesco Preferred ETF, ticker symbol PGX, is built for that exact purpose. PGX invests in preferred stocks, which are a hybrid between common stocks and bonds. They usually pay fixed dividends, and they get paid out before regular shareholders, which makes them a popular choice for income-focused investors. This ETF holds a wide range of preferred shares from large US companies, especially in sectors like finance, real estate, and utilities. These industries tend to generate strong, steady cash flows, which means PGX can continue delivering payouts even when the stock market gets shaky. What makes PGX especially appealing is that it pays dividends every single month, with a current yield of around 6%. It's not flashy, but it's dependable, and that's exactly what long-term income investors want. Now let's talk results. If you invested $1,000 into PGX and reinvested your dividends, you'd end up with around $1,790 after 10 years at a 6% return. But the real power comes when you consistently add more. Put in an extra $100 a month, and your portfolio could grow to over $17,200 in a decade, generating nearly $1,000 a year in monthly income without taking on wild market risk. PGX won't make you rich overnight, but it will pay you, quietly and reliably, every single month. If you want to earn real estate income without becoming a landlord, iShares US Real Estate ETF, ticker symbol IYR, offers a hands-off way to tap into the real estate market. IYR invests in a wide range of US-based REITs, real estate investment trusts, which own and manage everything from apartment complexes and office buildings to shopping centers, warehouses, and storage facilities. You'll get exposure to top names like Prologis, Realty Income, and public storage companies that generate steady rental income and return much of it to shareholders. The result? a diversified real estate portfolio wrapped into a single ETF. Now, unlike some of the other picks in this video, IYR does not pay monthly. It pays dividends quarterly 4 times a year. And its current yield is around 2.5%, making it a more conservative option for long-term income and growth. So what kind of results can you expect? A $1,000 investment reinvested at a 4% annual return would grow to around $1,500 over 10 years. If you consistently invest $100 a month, that could build into a portfolio worth about $15,000 in a decade, delivering approximately $375 a year in passive income, paid quarterly. While it won't deliver the highest yield on this list, IYR offers broad sector exposure, long-term growth potential, and zero property management headaches. It's a great choice if you want to include real estate in your income strategy, but keep things simple and diversified. If you're playing the long game and want to own real estate without lifting a finger, IYR is a solid foundation. If you're serious about building passive income, don't stop here. Check out my video on 5 Fidelity Index funds. It's perfect if you want low-maintenance investing with long-term growth. Or, if you're focused on income and early freedom, watch my guide on how to retire in 10 years using dividend stocks. It breaks down a full plan, step by step.